Hello everyone, my name is Sunday. I welcome you all to Against FX. If you are new, please do subscribe to my YouTube channel, all right? And if you have interest in learning how to trade Forex, all right? This is an opportunity for you to key in because we are on a 1-month training crash course. You are not expected to pay any amount. All you need to do is you have your own laptop or maybe your phone. Go to YouTube, search for Against FX. All right, just search for Against FX. That is my YouTube name. All right, search for Against FX. Then from this, all you need to do is just click subscribe button. That's all. Click subscribe button Against FX. This is YouTube name. Once you open it, click subscribe button. Once you do that, then you activate the bell sign so that once we upload any new video, you'll be the first to be notified. And apart from that, you go to playlist, open my YouTube channel, go to a playlist where I have like 3 playlists. So you choose, you just click on beginners free course. Beginners free course. Click on it. You will see all the videos, everything you need to know about trading. We are in 2025. You don't need to go to any workshop, go to any place or any physical place before you be able to learn something that you want to do. For you to be a forex trader, that is all the materials that you need. All right? You need to have the foundation, have the knowledge. All right? I have already pushed all the materials in there. So watch all the videos that are there. Take note. Don't just watch it as if you are watching a movie. Take note. Get a pen and a paper. Take note. Study it very well. Each video you must watch at least like 1 or twice before you can get the understanding. And I bet you if you do, the rest shall be history because you just grab the concept and just be trading on your own. I've explained to details on every topic that you need to know. Right now, we are on this topic, SMC strategy. We have other type of strategy, but let us deal with this one. I will teach you guys about 2, 3, 4 strategy. Anyone that now resonate with you, that you now feel you want to now choose, you can be trading that. It's not compulsory that you must trade SMC strategy. No, it's not compulsory. All right? You might be a scalper, all right? Anything. But the most important thing is for you to have the knowledge, the skill, and be grounded in it, because trading is a financial world. It's a skill set that you need to learn, you need to acquire it. All right, and it does not come cheap. It's not something you just start today and just know it. No, and you even learn on the job. As you are trading, you learn, you gain more experience. As you are trading, you gain more experience. That is how it is, guys. So that being said, the topic we are trading now, this is part 3, SMC strategy, smart money concept strategy. And what is smart money concept strategy? It's a strategy that will make you do your analysis and single out the origin that caused a break of structure, then that origin, there's another block, all right, that spikes that movement. That other block, you single it out, then you shade it, all right? You mark that place. And once you mark that place, you wait for price to return to that level. And as if you are there physically, maybe if you are the type that you stay glued to your chart and be watching as price action move, once you have just marked, then you wait for price to return to that level, all right? As once you see that level is holding, and you just check your checklist, those things that you need. Once they are met, you just take your trade and allow the system to do the rest. Or if you're not the type that stay glued to your system, after your analysis, you have already single out, refine your order block. Then all you need to do is for you to place a pending order. All right? Place a pending order, and that's all. Wait for price will come, and once price get to that place, that level where you put your pending order, it will trigger. And if you now move to your favor, you are in profit. If you move against you, you have your stop loss order that will take you out of the system, that will take you out of the market. So that is how it is, guys. It's not a rocket science. So on part 3, I'm still going to be showing you guys what it means by SMC strategy. Now, SMC strategy simply is something that we are bullish like this. Remember, once we are breaking structure to the upside, we are bullish, right? Now, this point here is a break of structure. As simple as that. It's a break of structure. Let's clone it. This is also a break of structure. All right, price started from here. Price started from here, push, created a high, pull back. All right. Then it gave us a low here. Then the next move, this low is what? A support. This one is resistance. Price moved from a support, it created a resistance. After this resistance, it pulled back, created a support. It took price lower, created a support. Then it now pushed again. It now took price higher above this previous price. This is now the highest price at this point. After it created a resistance here, breaking structure to the upside, now it took price again lower. Now, after that, it created a support. From this support, price now rebounded and now pushed again, giving us another high price. All right. Now the previous high has now been violated. So it has given us, price has given us a new high. So that is a sequence. That is a sequence. Now, as a smart money concept strategy, you that is trading smart money concept strategy like us, what we'll do now that we have identified that here there's a break of structure and here there's a break of structure. And remember, I told you guys, you must know how to read structure. You must know how to read structure. That is the foundation. That is the foundation. We now see that because it's breaking structure to the upside, I now know that this is a bullish trend. When we say bullish trend, we are simply saying price is always going higher. It will go high, then come back to support, then go higher, come back to support, go higher. So price will always create a higher price, a higher level, will always give us a higher level. After a pullback, to support level, it always give us a higher level. That higher level where it will get to before it pulls back, that is the resistance level. And that resistance level is where sellers will stay to push the price down. The support level is where buyers will stay to push price to the upside. I've explained this thing time without number. And I don't think there's any forex trader that will explain like this, just the way as I'm doing now. I've explained this thing over and over again. And the reason is because I want this thing to sink into your memory. Understand that buyers stay at a support level. Sellers stay at a resistance level. The reason why this price pull back to this level is because there are sellers here. Sellers are here and they now push the price to the downside. Now that he has found support here, meaning that buyers are here. If buyers are not here, that means this price will continue to push to the downside until you get to a point where there are buyers, that are more than the sellers. That is what happened. You should understand it on your own, reason it in a logical way. If, let's say, we have point A and point B, all right? Point B is going against point A. Then point A is coming against point B. So point B now, we are the buyers at the support level. Point A, they are the sellers, resistance level. We, the buyers, point A, we are pushing the price. As we push the price, and we now got to where the point A, where they are stationed, what will now happen? They will have to exercise their own force to resist the push. So as they are pushing it towards us. So let's say they are 100 and we are 40 or 50. What happens? They will come crushing us. They will overpower us, then push below us. And as they are coming, they will push us away. They will push us away until as they are pushing, as they succeeded in pushing us away because they are more than us. That means at that point, sellers are in control. Then price will now be decreasing. Price of that asset will now be reducing until the buyers will now rebonded. Once they are able to rebond, they will now form a group. Maybe at that point where they were able to form plenty groups, then they will now be waiting for price. As price get to that level, they will have to fight back to push the price. They will now start pushing the price to the upside. And if peradventure the buyers now are now more than the seller, they will push the price and crush the seller, push the sellers away, and they will now start taking the price up. As they keep taking the price up, they will get to a level of resistance where, okay, now you have succeeded in pushing sellers away at a particular level. They will give way. They will allow you to be pushing, but they will now go and form a group and wait for you at a resistance level where they normally wait, where they should wait. So all those points in the market as a structure, you must be able to identify them. Let's say, for example, this point is a resistance point. This point is a support level. This is a support level. This point is a resistance level. So it's the same thing that I'm giving you this illustration now. All right? Until price, the buyers push the price to a level where, okay, sellers will now gather themselves, and if they are more than the buyer, they will now take over and push the price down. That is how it works. Until finally, price will go to a level, the highest high, stop there, then sellers will now start to push the price to the downside. And the only thing you will always see is price coming down, create a resistance, then they will push it down. it will come back, create a resistance, they will push it down. That means we are in a bearish market. Once price comes down like this, once price is forming something like this, once price is now forming, start from here, forming something like this, like this, like this, like this, you know that you are in a bearish trend. Price will keep going down until this one again now happen. Price will now be breaking structure down. Anytime you now see price attempting to break structure to the upside, breaking the resistance, you know that it has given us a market shift. That means a bearish trend will not want to turn to become a bullish trend, or a bullish trend will now want to turn to become a bearish trend. As this trend is going up, the only time you will know that is changing is when the pullback come like this, as it's supposed to push to the upside, taking this previous high, it now stopped. It did not violate. It stopped and it did not violate this high or giving you an equal high. Once something like that happens, just know that, okay, as a smart person, you just take your profit and watch what will now happen next. If price now decide to go, okay, the first move, let's say for example, he now came here, he stopped here. Then the second move, he now come, he now stop again. Then the third move, he now come, breaking this one high, no problem. Allow it to come back. When you come back again, before you enter, and then push price up. That is it. But once he gives you something like this, hey, attention, you just need to caution yourself. Because at this point, if this move now is supposed to come breaking this level to the downside, that means this is a violation, market shift. That means price is planning to start pushing to the downside. So guys, that is how it is. That is how it is, guys. So as far as I'm concerned, the SMC strategy is a strategy that everyone will learn, and once you know how to do it, it's very simple for you to follow. Okay, so this is how it is. By the time you see a market shift, you should know that, okay, a bullish trend is about to turn to become a bearish trend. So that is it. Now, this SMC strategy simply means, okay, you have to, this level here, this is where the origin that caused this break or structure to the upside. Like here, this is the origin here. There's always a level here where price got to before it now started going up. The level it pulled back to when it found support, then before it starts going to the upside. So that level, something like this here, this is where you always find the origin, because this is where the support level is, and the origin is here that caused this push to the upside. So that is how you can single out from here, from this level. You will now trace the last candle before they push to the upside. You have to look for the candle. Now, let us go to the chart, and then let's do something so that you now understand what I am saying. Okay. I say, okay, let's analyze this chart. Let's analyze it. We remove all the forms. Let's analyze it so that you now see how it how we do it. It's not a rocket science. It's something that you practice. All right? Something you practice. Okay. Now, first I said you must know how to read structure. That one, you cannot negotiate that. As far as I'm concerned, this is a daily time frame. You have to do your analysis. All right? You have to do your analysis. Let's say I want to trade now. Maybe I open my system and I want to trade. All right? My strategy is SMC strategy. And the first thing I want to do is doing my analysis. Let me know where the trend is headed. Okay. I know that price, and this is British pounds and USD. I'm on a daily time frame. So I'm not okay. Let me read the chart and know what is really happening. Starting from here, this is the last low here. All right. I'm just doing it as maybe this is just for teaching sake. All right. If I want to analyze that, I will not come and start from here because it's too far. And this is just for learning purpose. I will not come and analyze my chart coming down to this place. I will come straight to this point here. So I just want to make it clear. No, it's just wasting of time, and before price will get to this point, it's going to be very difficult. So you look for what you want to do now. So that is how to trade. But for learning purpose, let's analyze this chart. You will see this point here. You see another point here. All right. We see another point here. All these are support level. That you need to, obvious support level that you need to first of all mark. Now we have marked the support level. If you look at it, you see price going like this, going like this, up to this point. Let's stop here. All right. This what? You now know that, okay, this, it has the characteristics of creating a high, pull back, creating another high, pull back, creating another high, pull back, creating another high. All right. Now we now know that this is a bullish market. From here to this point, this is a bullish market. Then another thing you need to do is the structure. Mark the structure level where the break of structure happens. There are other break of structure here, but just forget about it. Break of structure. The most important thing is for you to know where the trend is headed. Okay? Mark the obvious ones. Clone it, you bring it here. This is a break of structure, right? It's a break of structure. All right. Clone this one, push it to the outside. This is a break of structure. Then after that, price created a resistance. And here is the resistance. All right. Don't forget, the resistance is a place where sellers will wait for price. Support is a place where it's a level where buyers will wait for price. As simple as that. Now we have seen this like this. All right. And we say anytime we have been able to establish that this is a bullish trend. And we say in a bullish market, anytime a support level is violated, anytime, at any time, a support level is violated. What do we mean by violation? Push to the upside, push down. Push to the upside, push down. Push to the upside, push down. Push to the upside, push to the downside. Then price now did something like this. violating, this is a violation. This is a violation, guys. This is what we call violation. Price is supposed to be breaking structure to the upside, but it now got here. This is the highest high. Now it now gave us a lower high. So where is the violation? This point here is the violation. So when something like this happens, we say market shift has happened. It's a sign that price want to start pushing to the downside. It's just giving you a sign. Has it been established yet? No. When will it be established? It will only be established, the downtrend or bearish trend will only be established when price now push to the upside, creating a resistance without violating this this lower high. Now it now comes down again, breaking structure to the downside. Now, once you see something like this, you now say, at this point, you now say break of structure. This is now what we now call break of structure, because now this first push to the downside violating the support level is not a break of structure. It's just a sign of what? Market shift. It just gave us a market shift. Now, once you now see price pushing to the upside, because price can do something like this, then continue to now breaks. Now, when we use the word flip zone, is a little advanced. Let's leave it like that for now. You understand? Once it comes like this, creating a support, it will push to the upside. It will now fail to take out the resistance, the high. Then, as it's pushing to the downside, it will now violate the support level. Once it violates the support level, the next thing you should be expecting is for price to create a resistance without violating this previous resistance. But in some cases, price can decide to violate this resistance. That means the price was rejected by buyers. All right? They did not accept the defeat. They did not accept the new price. If buyers accepted the new price, after this market shift, there will be a pullback that will create a resistance like this. Then price will now break structure to the downside. At that point, we simply say that a trend has changed. It has changed from a bullish state to a bearish state. You see, after a break of structure, guys, have that in mind. Only after a break of structure has happened, you will now say we are now in a bearish trend. What will now happen? This is the origin that caused the break of structure. You go there, wait for price, because price will come back to this point. Here, there will be what we call order block. That order block is what triggered this sell. All right, is what triggered this sell, and that point here is the origin. So what you will now do is to wait for price to return back to that level. When price get to this level, then you now start pushing to the downside with the mindset that price needs to follow the order flow, because any attempt that price tries to break above this resistance level is no longer a bearish trend. And before that happens, it must give you, once this happens, that means market shift has happened. All right. Once you see price pushing above a resistance, a previous resistance level, and of which you are the trend is a downtrend, just know that that is a market shift. For the bullish trend, once a price pushed below the previous support level, just know that that is a market shift. All right. Once that happens, start changing your bias immediately. All right. But for the bullish or bearish trend to be established, after the market shift, there will be a break of structure. Wear that garment of patience. I will always tell you guys, wear that garment of patience for price to break structure. Once it creates a market shift, that is not the time to enter, because price can create a market shift and now still move as it's coming. It will come with full force, clearing all those things and resume the underlying trend. That is the reason why you have to wait for a break of structure after a market shift. You must be patient. It's not every move that you have to even take. You wait. Once it now breaks structure to the downside or the upside, you now know that, okay, that trend is established. If it is a bullish trend, you know that, okay, the sellers, they have accepted their fate. If we're on a bearish trend, and now after a market shift, it now creates a break of structure to the downside, you know that, okay, the buyers, they have accepted their fate. If it's a bullish trend, all right, if it was bearish and you now see a market shift, taking out a resistance level, then coming down before breaking structure, you know that sellers, they have accepted their fate. So you must wait. So what I'm trying to say is that this one here has no business taking out this leg. Another way to denote it is that once an origin breaks, takes out or violates the previous high or low, we regard that level as a strong level. In this case, now this is a strong high. It's a strong high because why? It took out, it violated this low and it created a new low. So if this push to the upside, is not supposed to take out this strong high. No, it's not supposed to take out this strong high. But in trading, it can happen. It can move and take out this strong high. Once it takes out this strong high, we just know that that is market shift. That is what I'm trying to explain. Now, after this breakers, after this market shift, price pull back to this level. Now, after that, price will have to pull to the downside, violating this level, this low level here. That time it will not say, okay, break of structure. Now, once you see a break of structure, you now start planning on how to get involved in the market. All you need to do is now single out another block. If you don't know how to refine other block, go. I've already made video on that. I've already treated that. Go and watch that video very, very well. Now, you now see you now know that this is what a level. This is the origin that caused this break of structure to the downside. Now, price will have to come back to this level to interact with this level before another push again, before price will now break structure. Why? Because price will have to go back to fill orders that are here, because sellers are here waiting for price to come back to this level. Yes. One of the things we also use, one of the tools is from this range to this range. All right. We now know that, okay, price will have to push below, price will have to move into what we call a premium level, into what we call a premium level. If you don't know how to use Fibonacci tool, I already make video on that. I've already treated it. Price will now have to go back. Price will now have to pull back to what? To price will now have to pull back to a premium level. Anything from 50 above, price will have to now push above, pull and get inside this cycle before price will now have to get inside this cycle. And once it finds a resistance, then you now start. A resistance is where sellers will wait. And once the sellers say, okay, that point you have gotten to is enough, they now enter, push the price to the downside. And once price breaks structure again to the downside, and it has already given us a low and a high, don't forget that is price range. All you need to do is, after taking your profit, because once you enter from here, your take profit will always be the previous high. I told you guys, target the previous high, because as price is coming, it's going to create a new high, a new low. Sorry, target the previous low, because we're in a bearish market. Now, as price is pushing to the downside, it's going to create another new low. All right. Once it creates another new low, we now say this is a strong high. This is a strong high. Now, price has given us, once it breaks structure to the downside, let's clone this. Once it breaks structure to the downside, what will happen is we now say break of structure. And where is the origin that caused the break of structure? Is here. All right, is here. So what we now need to do is for us to now bring out this our rectangle tool, shade it like this. Because it does not mean in trading, it does not mean that once price creates a low, all right, it now start coming back direct to come and interact. No, it can just be marrowing somewhere like this, going like this, until finally you now get to this point. It might take 1 day, it might take 2 days, it might take 3 days, it might take 1 hour, 30 minutes, 15 minutes, 1 week, 2 weeks. All right. It depends on your time frame, and apart from that, it depends on the movement of price. So all you need to do is just shade it, put a pending order here. In this case, because we are bearish, you put a sell limit order. Place a sell limit order here. You know that price will come and get to this point. Now, the idea is that once price trades to this level, anyway, even if it's a 1 month time, 1 hour, 1 week, 2 days, 3 days, as the case may be, once it gets here, sellers will not allow the price to pass, to go above this level. They will try to push it down. That is the idea. That is the idea. Because they succeeded in pushing this price, giving a new low here, a new price. Now, sellers are here, support level. They are here. They now start pushing the price. As they push the price to this, it's just like when you are playing a volleyball or a tennis. Team A will play, then team B will return it. You see that journey. As you use batting to hit table tennis, it will travel now before it get to the next opponent. That is what happens in price. All right. Now, buyers will now start pushing the price. Then once it gets here, because this level is a strong level, there will be a reaction. Does it mean that price will not be able to break above this place? Yes, of course, price can break above this place, but I assure you, once price gets here, there will be a reaction. All right, there will be a reaction. Now, the reaction could just be something like this, then now start coming down, or it will turn again then before it now finally breaks above it. All right, once it breaks above it, we just know that there are no sellers here anymore because it has broken above this level. And the next thing you now see price coming back to retest this level. The next thing you now see price coming back to retest the level, then it start pushing to the upside. What it then means is that market shift. So he's now trying to become bearish. And he's not trying to become bullish, I beg your pardon. So that is what happens in trading. There is no rocket, it's not a rocket science. All right. This point, like I said, is what? Another block. Why? Why? Because it's a strong high, and this is what caused this push to the downside. All right, so you have to wait for price to come. We now have a range. This range up to this range, that is a price. Price will now trade inside this, but once it get to this point, sellers will push the price down. As it's coming like this again, it will now break. Now, this level is what? It's a support level. Mind you, buyers are here. That is why we always advocate or tell people or advise people that once you place your order and your order is activated, as you are making profit, your TP, your target, once you enter, set your stop loss above it, your TP you should target the previous high. And where is the previous high? This one. As price move to this level, trigger you in as it's coming. This is the previous high. All right, like this one as it's coming. Once it gets here, there is every likelihood that there will be a reaction because this level is let's say price is like this. There's nothing here. All right. Your TP should be here. As it's coming like this, gets to this point, because buyers are here waiting for price to come. Because at this moment, this is the range. This is the high here. All right, and this is the low, rather. This is the lowest low here. Buyers are here waiting. As it's coming like this, your TP should be here because this is what we call reversal point. Now, price will definitely break below it because we are expecting a new price to be established. Once the new price, but should you wait until like this? No. Take your profit from here. This should be where you should be targeting. All right. As the price is flowing to the downside, this guy must give way because he's going to use every other thing that is here as a liquidity. Remember, I taught you guys what we call buy side liquidity and sell side liquidity. Maybe I still need to make more video to clarify that since since most people don't understand it. If price is pushing to the downside, this support level is what? Is a sell side liquidity because price will always come, clear this level to give you another low. Then it will go back, all right? It will go back. It will not take this buy side liquidity. Anytime price push and take this buy side liquidity, That means price will have to push above it. It will now give you a market shift. If we are bullish, now the target should always be the buy side liquidity because price is breaking structure to the upside every time. Now, if we are bearish, the downside is what we call sell side liquidity because sellers will always come, break this level, clear all the liquidity, create another new low. As it's going up again, it will not get to this buy side liquidity when it reverses all the orders, pending orders, everything that are here on the sell side liquidity. Price will come, clear it until that is the cycle, until price now reverse and is going up. That is it. That is it. And once you see price giving you, creating a new high, then you should expect a pullback. You just mark the origin that caused a break of structure. Use your what do you call it? A fib tool. Use your fib tool to now mark. Okay, from 50% up is a premium. From 50% down, this is what we call a discount level. Now, because we are bearish, we are expecting price to pull back into a premium level before we enter. Now, even if price is just ignoring, wait until 50% or and above is tapped into. Then if you now start seeing a rejection, a pin bar rejection, I've told you guys, and all those things, you enter the trade to push the price down. This is how far we can go. And I'm not going to talk about this smart money concept again because I really dealt with it. Now on the chart, let me show you guys what I've been explaining since. It's the same thing. It's the same thing. We have already identified our support level. Now you see price creating a high. This is a resistance. What do you see? You can see price giving us a high, pull back, creating a support. This support here is what we'll call a sell side liquidity. Now price will now push because we are bullish. Is always the target. The order flow is for price to always target this buy side liquidity. As it's going, clearing people that are here, taking all the orders, boom, it gets to this top, creating a new high. It has created a new high. Now you now come back, creating a support level. This support level will not, on no account should this support level, this price push below this previous low. Anytime that happens is a market shift. Okay, let's watch what happened. Price now rebounded and now started pushing to the upside. This is what? A buy side liquidity. Price pushing to the upside, clearing this liquidity, creating a new high. Now, after this new high, price came back. What happened? Giving us equal low. And I told you guys in my previous video, anytime you see equal low, equal high, it's a sign that it's a sign of change. A sign of change. We call it double bottom. Double bottom. All right, double bottom. If it appears at a resistance level, we call it, or at the top, we call it double tops. Double top is a reversal sign. Now, what will happen? This was the last support. Order flow. As price pulled back, got to this point, it gave us a double bottom. All right, no problem. Now we now see the next movement. Price supposed to push to give us a new high. It did not. It failed to create a new high. What happened? It now gave us a lower high, LH, lower high. This is a high. It now gave us a lower high. What will happen next? Once price now pull back, is it supposed to violate this point? No, it's not supposed to violate this point. But it has already given us a sign that price, something is changing. Why? Because price pulled all the way to this level, giving us a double bottom. All right, giving us a double bottom. Now, this is not even a problem. Where the problem lies is that price now pushed to the upside. Instead of giving us a new high, it now gave us a lower high. This low is lower than this. Now, this is a sign, a clear sign that price is trying to do something. And what now happen? The next push, what happened? It now push to the downside, giving us what? Violating this support level, giving us what we call a market shift. A market shift. It has given us what we call a market shift, MS. All right, it has given us MS. Now, if I see something like this, me personally, I will have to just take my profit and now wait for market to stabilize. At this point, after the market shift, price created this low. All right, price created this low, and once after this low, watch what happens. After this low, we are expecting price to pull back to give us a resistance, to create a resistance. Now, price did push to this level, giving us a double top. All right, a double top. After this double top, what happened? Price supposed to now push down to this level to give us, to break structure to the downside, right? It's supposed to push down to give us, to create another low, to give us another low. All right, but what happened? Instead, it created a lower high. All right, instead it created a higher low. Sorry, instead it created a higher low. This is a lower low, this is a higher low, created a higher low. Now watch what happened. It now push, it created a lower high, pull back, it created a lower, a higher low, they now push to this side, then finally now break this level. Now what happened? It now breaks down to this level, giving us a market shift here, giving us a market shift here, giving us a market shift here. You see, giving us a market shift here. But if you look at this thing very well, as far as I'm concerned, if I am trading, I'll just leave this and allow price to rebound. Now, give just price breaking structure to this, to the lows here. He has violated this point. That means a market shift has happened. All right, because look at where price got to. Price got to this point. This one is lower than this. All right, and the next thing you now see was price. Price now created, look at it, another market shift here. Price now created another market shift here. That is what we call flip zone. It broke structure to the downside, immediately broke its structure. It broke structure to the downside, and now break structure again to the upside, violating a support level, also violating a resistance level immediately. Like this, it push, violating this one, push to the upside, violating this point. Now, at this point, what we should be expecting is for price, now that he has given us something like this, because this low is lower than this, all right? He has given us a higher low, all right? So what we should be expecting now is for price to start pushing again to the upside. Until this level is violated, I personally will not enter the trade. Until this level is violated. Once this level, if price gives me a new high, clearing off this buy side liquidity, Then I'll wait for price. This is what I'm saying. I'll patiently wait for price to clear this buy side liquidity, come back, then I can now, once it push, come back, respect this level, breaking structure to the upside. Okay, I can now start planning on how to enter the trade. All right, I can now start planning on where to now wait for price. Once it pull back, I'll now enter. But once it clears out this buy side liquidity, I know, okay, price is trying to resume the underlying trend. But if it fails to take out this buy side liquidity, that means price might come back to this level, clearing this sell side liquidity. And once this sell side liquidity is cleared, giving us a new low, then I can now start planning on how to enter the trade, to join and sell the market. That is how to plan for trade. You don't just jump in between. Like as far as I'm concerned, this, what is going on here right here, I have no business jumping into this trade. When you scale down, you see how the whole scenario is. You can now see it's just pushing up and down. So you wait, let the price tell you what it wants to do. Two things will happen. It's either it will go take out the buy side liquidity, or it will resume again to take out this sell side liquidity. Until that happens, I will not take any trade from here. So guys, that is how you should trade. You don't need to start jumping into any trade prematurely. Like I told you guys, you always have to be patient, put on a garment of patience. That is the only way you can be successful in as a forex trader. So you don't need to rush. You don't need to rush. This guy here, right here, he has not told us what he wants to do again. After this market shift, price created a low. Now, since then, price is just dangling here and there. If he move to this upside, clearing this buy side liquidity, now we wait for a pullback before anything. Otherwise, let price resume the underlying trend by coming down to give us another new low. Until then, I will not do anything. So that is how it is. Just leave everything on hold until there is stability in the price, because it's just not giving you a clear direction right now. If you look at the main movement, you discover that price only did this, like this, all right? It's supposed to come back and give us a new low. All right, because from the higher time frame, this is where this is it. From the higher time frame, let me show you. From the higher time frame, this is it, like this. This is a pullback from this push to the downside. So let price, once it's done pulling back, it should come giving us a new low. So that is how you trade SMC, guys. Our next video, I'm going to teach you guys another strategy on how to trade support and resistance. So I told you I'm just going to teach you about 2-3 strategies, any one that resonates with you that you now chose personally after you have tested all. Because it's good for you to know all. You know them, then you now stick to what all works perfectly. If you are a support and resistance trader, it works. If you are an RSMC trader, it also works. If you trade demand, supply and demand, it also works. So if you trade pin bar or any strategy, provided you master it, master the craft, that is it. Master the craft. Don't switch from strategy to try the strategy. Like I told my guys, even if you are saying you are a support and resistance trader or another block trader, or maybe what do you call it, demand and supply trader, that is the strategy you take. At the end of the day, do you know what happens? Everything boils down to where we have support and where we have resistance, or where sellers stays to wait for price, and also where buyer stays to wait for price. The only difference, some you refine them to one candle, some is a zone, some you wait until it gets to that level. So everything is interwoven, it's the same thing. All right, it's the same thing. Because if there's a push to the upside, price giving us a high, you have to wait for price to come down, giving us a low before you buy. So it's the same thing. Or if you want to sell, once price push to the downside, you wait for price to push again, return back to a support, a resistance level, that is the upside, before you buy, before you sell, to push the price down. So thank you so much. Make sure you share my video, like, comment. And if you're having any difficulties as to what we are teaching you, please leave it at the comment section, all right? Or you can send us a mail so that we can, even if it warrants us to make another video to support the previous video, because just let me know the topic so that we'll know how to throw more light. So until then, make sure you subscribe to my channel, hit the like button, activate the bell sign so that once any video is uploaded, you'll be the first to be notified. So thank you so much, and God bless you all.